if the CBDC conversation was really described as what it actually is, wholesale, intra-bank, evolution of settlement systems and payment systems, game on. Let everybody enjoy the competition.
So welcome back, everybody. This is a special episode. I've known this gentleman who's sitting across the chair. I won't say I've known him, but I've been seeing him for the last few years because, you know, we go on this annual scavenger hunt of conferences. He seems to be at most of them, and he seems to be front and center, flying the digital assets stablecoin flag. His name is Dante Disparte. He is the Chief Strategy Officer and Head of Policy at Circle. So with that, welcome to the show.
Thank you, Arjun. It's great to be with you.
And we're in SFF. It's day one. We're recording live. It's already madness out there.
Well, it's the Olympic Games of FinTech. It's always fun to be back.
It is, right? I make the mistake of coming back every year. I've been here since 2017. Someone actually sent me a picture last night. I looked a lot younger. That was the only observation I had from the picture. But Dante, thanks for making this. I know this was all done very last minute, so I appreciate you making time. Our audience is fairly global, right? Obviously, Circle is a global company, but it would really help if you give us a little bit of a flavor in terms of, you know, what is Circle? You know,
Sure.
What problems are you solving? What products and services are you offering?
Sure. Well, look, in the industry that we operate in crypto or digital assets industry, Circle would be a 100-year-old company. We're actually an 11-year-old firm. Founded by Jeremy Allaire, who's our CEO, and we operate effectively in issuing digital money. Our core product is a product known as USDC, which is a digital dollar. USDC today is more than $35 billion in total circulation. But what is the breakthrough about this innovation and why it matters is effectively it's an open source product. It allows for anyone, anywhere with little more than a basic internet connected device to have access to a digital dollar effectively for payments, for store of value use cases, and for programmability, which is the next real breakthrough when you think about what digital money can support. Over the 5 years, or more than 5 years, actually 6 years now, that USDC has been on the planet, we've supported more than $17 trillion in on-chain activity or payments and storage and store of value use cases all over the world in more than 200 countries. So this is a breakthrough innovation. Money designed for the age of the internet is the best way to think of it.
Before I get into USDCs and solving, is most of the focus around moving money cross-border?
Yeah, well, it's one of these interesting ironies, and I suppose it would make for a good conversation for your listeners, that in the traditional financial sector, of course, we do think of cross-border payments because in so many ways, analog money needs to move through the correspondent banking system or through fintech companies. But in our world, it's the money itself moves more like email moves. Mm-hmm. You don't think of sending a cross-border email. You actually send email to trusted recipients. And so in the same spirit, we think of this as actually borderless money. That can arrive instantaneously the same way you would send a text message or a WhatsApp message or an email. And the key, of course, is to send instant money to trusted recipients. And so, yes, cross-border payments and remittances are some very classical use cases where, frankly, for lack of competition and lack of technological upgrading on the rails on which money moves, those forms of money movement are really stubborn and stuck, frankly, in a world of very little competition. Something like USDC and, frankly, the rest of Circle's products and services are really designed to enable anyone, anywhere to have access to this form of money.
Okay, and so that sort of stems two questions, right? And one, I totally agree, and I think cross-border payments is full of inefficiencies. It's slow, it's unreliable, et cetera, so easily disruptible. Some of it because of design, some of it because of this word called interoperability. And I think this was an interesting conversation. I didn't know, were you at the Inclusive FinTech Forum a couple of years ago?
I was not, but Inclusive FinTech is the thing that gets us out of bed in the morning at Circle. So,
right. So it was a very interesting discussion. So, but inherently emails or text messages or the other messaging, they're sort of closed loop systems, right? So how much of what you're doing is establishing a very large closed loop system? It all flies as long as it
Mm,
sits on your system. What then starts happening on interoperability, one
mm,
end, right? Because you might want to be interoperable. I'm not
mhm.
suggesting there isn't. And then what happens on the far ends of these transfer when money has to move back into,
Yeah,
I guess, non-digital formats,
yeah.
right? And does that convertibility make all this efficiency then inefficient because of that sort of last mile?
Yeah, well, look, most of the payments world has two big legacy problems. Even if you have the best intentions in the world, if you're using proprietary technologies to run your payment system, by default, your payment system will serve your customers. And so Circle's technology choices are all open source.
Okay.
For example, USDC is available on more than 16 public blockchains.
Okay.
Think of the blockchain as the ledger on which transactions are recorded. Everything else you don't need to master. It's just basically a ledger, an open database for internet scale transactions. That alone enables USDC to be available. In 5 years, we have active USDC wallets in more than 190 countries and counting. Every single one of those endpoints is a part of an open network in which money can move in a more open, freer fashion. That's like design feature one, in which the advent of this innovation is a breakthrough. The second, and this one's really important, all of the world's successful global payment systems, pick the entity, pick the payment medium, most of them are actually messaging innovations, sending an instruction of whose balance sheet to debit and credit. And so if you want money fast, oftentimes the very biggest networks in the world charge you more for speed. In our world, there is no such domain, because when you transmit a stablecoin transaction or USDC transaction, you're actually sending the bearer instrument to the recipient the second it arrives on their phone or any other device, their computer or what have you.
Yep.
And so for those two reasons, this is actually a breakthrough in open money and open finance. And as a result, a lot of the bigger use cases we're supporting today are with humanitarian agencies. The UN and many other agencies around the world are turning to these platforms and USDC as a medium of exchange at the speed and scale of the internet.
Let's understand USDC a little bit more
Sure.
now, right? So typical questions: stability,
Yeah.
reliability, right?
Yeah.
Which is, how do you maintain the one-to-one peg?
Yeah. Well, look, I think first of all, I'm not a particular fan of the term stablecoin, nor, as I hope I've demonstrated so far, so I'll be asked to come back onto your program, am I a particular fan of jargon, because by default, the technical language tends to exclude people or it tends to hide the real functions of certain products. And so USDC, we think of it as a digital dollar.
Okay.
And in order for it to be a digital dollar, it actually has to be backed by dollars. Novel concept, perhaps, because in the stablecoin world, there have been many a stablecoin that have failed the very basic test, the stability test. And USDC today is principally cash and short-dated US treasuries in the hands of the largest custodians and asset managers and banks in the entire world. It's the safest form of digital cash on the planet. That's sort of step one. The second step is, of course, to ensure that you don't have to take my word for it or our Twitter account for it. You have to actually trust and verify. What I call the Jerry Maguire test of stablecoins is show me the money. And so in order to address that test, we have a trust and transparency framework, frankly, that would put most major banks and or e-money companies to shame. You could see in real time the serial number of all of the treasuries comprising USDC today by going to a particular website. That fund is managed by BlackRock. And all of the reserves comprising USDC are also attested to twice monthly by one of the world's largest accounting firms. So you don't have to take my word for it that the money is in fact there, which is why it solves one of crypto's biggest problems, buyers and spenders remorse.
Yep.
If the asset's hyper volatile, it's never going to be used for payments.
So if I may ask this question, you mentioned you're not fond of the term stable coin, right? And I guess you're not fond of the term stable if it's actually not stable. Is that?
Well, I mean, it would be the very biggest global example of sort of consumer harm is if you're advertising something under the banner stablecoin and it turns out to be the Terra Luna project,
The unstable
which
coin.
blew up in the span of 3 days and lost $60 billion.
Yeah, it was.
So I think if you're going to use the term, you actually have to put in place a structure, a regulatory, prudential, and banking structure that addresses that fundamental stability question.
So then let my simple brain ask a very simple question, which is, why only a digital dollar? Why not a digital?
Sure. Well, the short answer is, well, we haven't stopped at the dollar.
Okay.
We also have a digital euro denominated stablecoin known as EURC. That product is, and our digital dollar, by the way, USDC, are the first two of the global stablecoins in circulation to comply with the world's most stringent, far-reaching rules for crypto assets, known as the Markets and Crypto Assets Framework in Europe. We chose France as our regulatory hub, and this product is passported across all of continental Europe as legal electronic money, both the euro and the digital dollar cousin. And so beyond that, though, we don't necessarily, as a company, see an ambition to digitize every currency in the world. Frankly, one of the reasons we believe in this open network-based model is that we would love to see a Singaporean circle. I mean, we're of course domiciled and licensed here as well, but in order to digitize national currencies, you of course want companies to evolve in the national regulatory environment that can provide for sub-Saharan African currencies and Southeast Asian currencies to be represented in this digital format, which would lower the cost of cross-border transactions, reduce friction, ensure that FX or currency exchange activities can occur in a much more efficient manner. Because the way money moves today, it introduces such a heavy cost on the people who could least afford it. And effectively waiting for funds to arrive is a penalty, limiting commercial activity, exchange activity, and prosperity, frankly, for real people.
Interesting. So can I zoom up a little bit?
Please.
Yeah. Let's just talk about this entire ecosystem. I had someone earlier today sitting where you are, and we talked about CBDCs, right? So if I just take this
What is that?
Sorry, Dante. I asked the question.
What is that?
but that actually is the question, right? So we talked a little bit about retail CBDCs. We talked about wholesale CBDCs. You know, I was provocative with the question saying that, you know, retail CBDCs are an answer looking for a problem, right? Although I do see certain use cases, especially with certain countries. But how do you see this digital currency world, right? Where you are going to have stable coins, which are stable. You're going to have some cryptocurrencies, you know, call them whatever you want to call them. No names here to be taken, but some old coins and others are coming through. And you will have CBDCs, right? In a lot of ways, CBDCs are pegged against the fiat, right? It is the digitization of the fiat. You are obviously also pegged there. So how do they all work? Are they all going to be use case driven? And how does a simple person like me get his head around, or a simple business like me get his head around?
Sure. Well, first of all of it, in my view, falls into this category of a global digital currency space race. And at some level, we also then have to accept that the terms of art, tokenized deposit, central bank digital currency, retail, wholesale, or hybrid, stablecoin, and tokenized real world assets, which increasingly is treasuries. All of these products effectively are stablecoins by any other name, are still a stablecoin.
Okay.
And the best way to think of them is as digital demand deposits, something that entitles the coin holder, or the in this case, the digital deposit holder, to redemption at par for the underlying asset, even if there's stress in the banking system. These are really important features because frankly, without that relationship of digital demand deposit, where I could withdraw the cash into the real world or use it in its digital form for real activities, then a lot of this internet money ends up, frankly, at the extreme looking like JPEGs, graphic interchange and other files that have little value, or they're monetary airline miles. They're usable, but only if you're operating on these potentially closed networks. So I think it's super critical, no matter what form money takes in the future, that A, it has to be usable by the end user. And that includes publicly issued digital currencies. B, it needs to enjoy merchant acceptance. And so this is where the actual breakthrough in the digital money race has nothing to do with the tokenization of assets. It actually has to do with the rails and the openness of the rails and the endpoints on which it supports. Because frankly, while many central banks are thinking about these projects, mBridge is a classical example. I've been at the front row conversation since the beginning. Oftentimes they look more like an intranet and an extranet, but they genuinely would fail the test of being an internet of value, because the internet is open, networked, permissionless, and enables peer-to-peer engagement. Whereas an intranet or an extranet is closed and favors institutional counterparties. So then the next question is, well, which one of these will win? And I've abandoned the concept that this is actually a clash, a digital currency clash. I actually think of them as coexistent, because one is bottoms up and the other might be top down. And eventually you want these types of networks and systems to speak to one another.
You mentioned a very interesting thing around intranet, extranet. They're not internet, they're not open source. A lot of that has to do with what I call regulatory disharmonization.
Totally.
Right. It's incredible, right? Every conference we go into, we talk about regulatory harmonization.
Yeah.
We step out of the conference, the next day we look at the newspaper virtually, and you hear about a country which is joining another country, trade bloc partnerships, but they'll come up with completely different regulations, or not completely different, but regulations which sometimes you go, why couldn't you two speak together?
Yeah.
We have people who are part of certain blocks, and they're also struggling to get the regulatory harmonization. So my question here is twofold, right? One is, if CBDCs do capture the imagination and come to reality the way they're expected to, and I think at Point Zero Forum, there was this world map put up with how many projects were underway, and I think we had 120 countries doing something or the other with wholesale and retail to CBDCs. Let's be honest, the central banks will push it because it'll be their sort of pet project, right? At the same time, if you are maybe bottom up, I'm assuming, right, your adoption is coming through corporates, individuals, and so on and so forth. How does all of this converge? I agree with you that they'll all sort of coexist. Isn't interoperability going to become a massive industry? And then what does that mean for Circle? Should you be actually helping these countries build their CBDC networks? Because you guys have progressed on the technology, I guess, further ahead.
Yeah. So I'm going to make a shameless plug. I have written.
You're more than welcome to.
Written a lot about CBDCs.
Okay.
And I have an article titled "The 10 Risks of CBDCs."
Okay.
And one of the reasons
is that published?
It is, yeah. And then I have a bunch of stuff on CBDCs, including a paper titled "The Case Against CBDCs," published in the International Economy Digest.
Okay.
So, but the reason I'm not a fan of central bank digital currencies has everything to do with the reason there's 60,000 people and counting here at the Singapore FinTech Festival is because Singapore is a country that has determined that industry can thrive, and where industry can thrive with fintech, it's because there's a rules-based system. The second a central bank introduces particularly a retail central bank digital currency, it is choosing to compete with its high street banks, and it's choosing to compete with the payment systems operators that actually create 21st century value-added money. Most of the money in circulation on the planet that is value-added beyond cash actually enjoys private sector innovation, merchant acceptance, Visa, MasterCard, ACH. The list is enormous. And so my analogy for CBDCs is it would be the equivalent of aviation safety authorities choosing to fly planes and build jet engines. Guess what? You might have one choice if you ever were to fly, but it would be unsafe and the technology would be antiquated. Versus a rules-based system for competition in the skies in which you would have choice, and as a result, you would have safety because people would be competing against a certain standard. And I think the future of digital money will very much look like the past, which is that the more you have competition, the more the competition is rules-based, the more your currency at a national level will be an export product. In the United States and the US dollar is not just a global reserve currency because of the Bretton Woods system and the post-World War II financial era. It is the universal currency around the world, in part because it enjoys ubiquity and merchant acceptance and the ability now, frankly, due to stablecoins like USDC, an expression on the internet as well. And I just cannot conceive that central bankers will be able to make that 100-year bet against Moore's law and against all this technology innovation that we're seeing in SFF.
So Dante, is there a letter going from you, which is a class action sort of joint effort to say, because do you not feel like the tide is heading in one direction?
No, not at all. No, not at all. In fact, in some ways, the birth of central bank digital currencies is a byproduct of my former project, Libra.
Okay. Oh, okay.
And so I saw the rise. Where I will be entirely in agreement with central banks and authorities that run money is that it should enjoy invisible hands, whether they're Adam Smith's or Jerome Powell's. Number two, the provision of a safe and sound monetary system and central banking and payment system, of course, needs competition and rules. That's what I'm suggesting. And so if the CBDC conversation was really described as what it actually is, wholesale, intra-bank, evolution of settlement systems and payment systems, game on.
Game on. Yep.
Let everybody enjoy the competition. The second, in the United States, we had a visceral allergic reaction to the idea that the central bank would have a red button that could deplatform you from your money. Money is a public good, and the public authorities who rule and run money are given that authority by the people in power, or in a democracy at least. And so protecting those air gaps between the central bank, your wallet, and how you spend your money is a feature, not a bug.
And hence the case for retail CBDCs being a waste of time.
Monumental. And frankly, even the ECB, the European Central Bank, is shifting towards an intermediated model, a wholesale model. But here's the other problem, Arjun, and knowing that I'm speaking to someone who's thinking deeply about the financial inclusion case study, the global case study here, a central bank digital currency is fundamentally a domestic payment systems innovation. And if all it does is create a digital twin of the existing financial system, which has precluded billions of people from being plugged in, then guess what?
Why
we
would
failed.
it include it into the future?
So if you really care about the digital transformation of finance, then the point should be everyone, everywhere is now within reach. And I just don't see how a wholesale or even a retail CBDC can pull that off. It's outside of their borders. It's not internet scale money. It's going to be very much confined to domestic payment systems.
Let's circle back to USDCs, right? So what's the silver bullet, which is going to get mass adoption? What's going to get you guys 10x, 20x from where you are today?
Yeah, it's a good question. It's a very good question. So obviously, in the technology world, we speak of killer applications or killer apps. If you look back at just the use case and the user experience of something like USDC, in 6 years, 0 to 190 countries, 0 to $17 trillion in activity and counting, millions of wallets and applications and fintechs around the world are already using the product. So in some respects, this is already a product with escape velocity user adoption. The next three things that have to happen in order to go from, billions to trillions, if you will, and then hundreds of millions to billions of end users, is number one, legal and regulatory clarity is actually critical. Mm-hmm. So as a company, we've worked with every policymaker, every central bank, every major jurisdiction in the entire world to help shape rules that, to your point earlier, harmonization is an optimistic term, but that at least create interoperability. Mm-hmm. This is internet scale money, but it still it needs to land and expand in different countries around the world. So this rules piece is really critical. The second, of course, is the technology has to fade to the background. This conversation was great because we didn't use too much jargon, or at least we tried. We have a penalty box, but the tech is in your face still. Mm. When was the last time you went to an internet conference and spoke about routers and hardware and software, right? The internet is in the background. Blockchain finance needs to go through its dial up to broadband phase. Mm. And I think we're getting there. And that's happening in a very open source way. The last one, of course, is integration in the end user domain and in the business domain is already taking effect. But that's where we see, major partnerships with Grab here in Singapore, Nubank in Brazil, and this kind of adoption curve where the fintechs and the neobanks are also a part of this wave. In this sense, it's not a disruptive technology, it's an augmenting technology. And so we're very optimistic as a company about the road ahead, the future. The competition also tells us that this franchise has now reached its coming of age moment. And so we're very excited about 2025.
So you're going to have to scale. Last question, Dante. Places like SFF, right? Why do you guys come?
Yeah, look. First of all, I feel a little bit of a Singaporean ambassadorship status, having sort of watched the birth of FinTech Nation, and now obviously this transition from Elevandi to the global financial technology network and beyond. We wanted to ensure that we could plant a flag here. So we determined that Singapore would be Circle's Asia hub. And so a few years ago, we got our major payments institution license in Singapore. And the ability, frankly, to fly the flag is not only a chance to underscore what Circle is all about, but what Singapore and what our partnership with Singapore is all about as well. And so it's hard to miss the Olympics of FinTech. I enjoy coming every year and hope one day I actually do earn my FinTech ambassadorship status on behalf of the country.
I'm sure you will. I'm sure you will, and I'm sure. And I hear great things about Circle. To be honest with you, for the little we see, obviously, I'm a part of the world where we've been a little bit slow on the digital currency, virtual assets, but I think we're in the Middle East. We're actually catching up a little bit, sort of faster. I think the whole wholesale CBDC bit has actually enamored them. Obviously, UAE has established itself as a bit of a hub for I guess digital currencies, digital assets, which is sort of more legitimate term these days instead of using the word crypto, right? But there's more crypto businesses, I guess, per square meter in the UAE than any other part of the world. But Dante, thanks for coming.
Thank you, Arjun.
I know this was short and sweet, I hope. Enjoy the rest of the conference for however long you are, and
Well, next time we'll do this from Dubai or somewhere in the UAE.
I would love to, and that was what I was going to say. It was like, please come on for the longer version of this of the podcast where we go a little bit more deep into topics. But next time you're in the Middle East. I travel quite extensively too, but next time you're in the Middle East, love to host you on an episode.
Thank you so much.
In our place, right? So, ladies and gentlemen, that was Dante Disparte, who is the Chief Strategy Officer and Global Head of Policy with Circle. Interesting discussion. We did keep the technology jargon as much out of it, largely because I don't get any of it. But Dante obliged, as I might like to say it. With that, I'd like to say thank you, and I'll see you in the next episode. Bye.